see the last question. I have several questions related to what we expect for 2013, a worldwide economic slowdown.
Yes, I think Europe will be in a recession and the US will have either very slow growth or a recession as well. And I think the way I see it, traveling around Asia, we're off the peak economic activity. We're not in a recession, but if we would measure peak economic activity 9 months ago, and today we're definitely have cooled down. And say Singapore, that has a relatively honest statistical department, they admit that they are technically in a recession. It's not that business is bad, it's just that it's not as good as 9 months ago.
But if the growth will increase, do you think it's still possible for the debt
Well, I think that government debts, regardless, will continue to grow because the deficits are still there, and maybe the deficits shrink somewhat, but I'm not sure about that. I think the deficits will stay at a very high level, so it means government debt will grow. Maybe the total credit market debt as a percent of the economy will not grow. Private credit growth slows down, government credit continues to grow. So yes, I think the sovereign debt problem will not be solved, but will be postponed.
Parla più forte.
In relation to the quantitative easing, we had these free quantitative easing in the United States, and now the last one was launched in September, but since then the stock market started to go down. This means, do you think this means that the quantitative easing is not working anymore?
Well, basically in economics it's like this. If you have, say, in fiscal policy, you have a fiscal deficit of, say, 100 billion, and you double it to 200 billion, you have a stimulative impact. But once it is 200 billion, if you increase it by just another 100 billion, the impact will diminish. So you have to increase the gain by, say, the same percentage. So you will have to go from 100 billion to 200 billion to 400 billion, and so forth. And in monetary policies, QE3 is relatively minor in its size. And that's why some people at the Fed that actually make Mr. Bernanke look like a hawk, they argue that it should be much larger. But, you know, with money printing, and this I pointed out in my speech, what is not clear is you can drop the dollar bills onto the United States, it could lift equities, it could lift bond prices, it could lift gold, it could lift real estate, it can lift also economic activity somewhere else than in the United States. It's not sure that it will lift equity prices. And I think we made an intermediate peak in early September at 1,474 on the S&P. We're now down to 1,340 or thereabouts. I think from the peak to the low, I would expect a decline of at least 20%, and many stocks have already declined 20% or more. And then we'll have to see. My concern is increasingly that 1,474 on the S&P may actually be a longer-term high, that we're not going to exceed that for maybe 1 or 2 or several years.
If we talk for a minute on Europe, Mr. Feldstein last week in the newspaper and he said that the euro need at least 20% devaluation of the currency as a solution for the euro problems. My question is, how is it possible to devaluate the euro versus the US dollar that must be weak?
Yes, this is a view that some economists maintain, that devaluations help, and you know, they can help temporarily, but it doesn't help in the long run, because if you look at economies that have done well over a long period of time, these are usually economies that have a strong currency, not a weak currency. And if currency devaluations would make a country competitive, then I suppose that Zimbabwe would have become the most competitive economy in the world.
Last question, but I think for the Italian people is the most important one. If you are Italian or Spanish
Yes.
or Greek,
Yes.
what do you recommend to your son and why in the next 5 years?
Well, I mean, this is a long story. I think the generation that is now age bracket 20 to say 35, they never experienced really a recession the way we had the Depression years. They never went through a war. They never had to go really to the army and fight in war times. And they grow up in an entitlement environment where they're sick, someone will pay, an insurance company or the government, and they expect when they retire to have pensions, and they expect if they're unemployed to get unemployment benefits. I mean, this all is a trade-off. Basically, the more the government will give, the more freedom it will also take, and the more private initiative will die. And the extreme case of government taking care of people is the socialist, communist model that we had in the Soviet Union, in East Germany, in China, in Vietnam, that were complete, and I repeat, complete economic disasters. Whereas economies that have little government involvement, where people rely on their own initiative, where there's no social security to speak of, like Hong Kong, Singapore, are relatively thriving economies.
Basically, are you telling us or to Italian young people to try to leave or Spain?
Not necessarily, but I think it's sad to say, but unless you cheat the government, you will have a hard time. So you have to find ways to essentially avoid government regulation and government infringement in your personal freedom, and then it's difficult, but I think if I were young, and that's what I did, I moved in '73 to Asia because we had democracies in Europe, and we have a democracy in Switzerland that functions halfway decently, but we have very little freedom. In Asia, I have no democracy anywhere to speak of. I can't vote anywhere, but I have complete economic freedom.
Thanks a lot, Marc. Thanks a lot for your time.
My pleasure. Thank you.